Hi guys, Harry Yotis here, professional trader for 20 years now. Started way back in 2005 and still alive in 2026. So today, which way are we going? Massive rip. Today, well, let's start off by saying that today is Friday, the 10th of April. Huge week, huge past 2 weeks, okay? Great end to the week if you're bullish. Not so great if you're bear stuck in this trap, who got trapped in this move. So, which way? Well, guys, stick to the end. I always give my positions, what I'm doing, and what I foresee towards the end of the video. So stick all the way to the end. Don't just watch the beginning, and because you get more of an in-depth approach. Okay. Well, always we start off with the technical picture. Same as yesterday. We finished strong today, even though we gave up. We're coming off the highs, but still, we are in this chop zone. We're neutral. I was going to say bullish. Okay, we should be bullish because if you bring in the moving averages, we're trading above the 50 here in red, above the 200, and above this key zone. So we're technically bullish, but no. I kept saying it for months, and I'll say it again. As long as we're in this sideways chop zone, we're going to be in neutral status, okay? Although looking good, okay? The neutral status in terms of the technicals, and yet we always paired with sentiment, fear, still in the middle of fear. Still extreme fear, getting better here on the breadth, market volatility, greed, and the safe haven demand. So it just goes to show you that we are still in fear. People are still giving bearish news. We are stuck in a limbo when it comes to the oil game or the Iran war. Will they do peace? Will they not negotiate? Who knows? It's going to be an up and down ping pong battle. But we've said it before. The sentiment is on our side because we are net bullish. Because it's a contrarian indicator. We have plenty of room to go into greed and extreme greed. And the fact that we keep getting this wall of worry type of news is very, very good for us. And this is very, very good price action as well. So and I kept saying this whole down move, okay, this whole short-term bearish move, I kept saying that the macro is getting better. And today, we had another macro print, okay? And big news, inflation. The CPI came in at 0.9%. Huge, but this was to be expected. Okay, this was to be expected because this is the United States inflation rate month over month. So this is the classic CPI. However, if you look carefully, I mean, this was the CPI, but if you look at the core CPI month over month, do we even have that? Inflation rate month over month, core. It's just 0.2%. So we had 0.9% with the headline CPI, but 0.2% in the core, because the core does not include energy prices, food and energy. So if you look at here, the big news on CNBC today was the inflation breakdown for March 2026 in one chart. We go back here, this is the chart, and if you look, the numbers here for food and home, barely nothing, but it's all energy. It's gasoline, electricity, all that kind of stuff. So it's basically the gas component, the energy component in the CPI that is destroying it, okay? And look, airline fares, pretty much the same thing. So because you add the fuel cost. So it's basically this entire inflation move was muted. It's basically 2%, 0.2% for the month. So nothing to worry about there. The market was expecting everything and they got that. So that's why you have absolutely zero move. So this was very bearish if you look at it because inflation is still high. But the market, like I said, discounts the future. It doesn't care about what's happening now. It's going to happen. It cares what happens 6 months in the future. And this move down already took that fear of inflation into effect. And now the market is telling you that it's going to be short-lived and we're probably going to start seeing lower prints on inflation going forward if this, ceasefire happens and the Straits of Hormuz opens, etc., etc. Okay, so we have this whole CPI macro move could get reversed, which I think it does. Okay, the market is telling you that there's nothing bad. Okay, so big news. Which way? Which way are we going? Are we going up or are we going down from here? Okay, well, as I mentioned before, the whole move down here, we mentioned the fundamentals are strong. We had strong underlying jobs report. We had initial claims that are down. We had ISM manufacturing and expansion for 3 months straight. We had all of these new news that are coming out that are macro related that show no real damage to the market. Okay, so that's why I said we would, but for this war that went down, we would be at new highs. Okay, so I think we get to new highs. Okay, I just don't know. If it's a shot up, great, because we are net long. Okay, however, we are very, very stretched. This move here from 630 on the SPY to 680, let's say, it's like an 8% move in like 1.5 weeks. Huge snapback, 8%. It took what, 2 months? Let's say from here, from February, April, March, 3 months for it to go down 10%, 1.5 weeks to go up 8%. So it almost recovered everything in like super fast time. These are snapback rallies when you have extreme sentiment and extreme positioning here, like here before we had the extreme fear in single digits here. Okay, so when you have this extreme moves here, you get wicked snapback rallies. And the reason why I was still bullish is because, like I said, the macro is still strong. So which way from here? Well, I think that because we are so stretched, we go down. We go down in the short term. We might even, I don't know where. We could even cover this gap here, drop, which is basically like maybe there's some kind of scare that the war is going to be back on. We could cover this gap to 660 and still be bullish and go up. But we could get a very muted one down to like 675. That would be uber bullish, okay? Because we are getting very, very stretched here. So I expect a down move in the short term. It doesn't have to happen. I just expect a down move. And that's what I'm saying, guys. Should stick around to the end, because here we are close to the end, and I'm saying what I'm going to do here. Yesterday, I took some short exposure, and today I added a little bit more short exposure. Mind you, okay, I did it with option. I did call spreads. I sold call spreads. Okay, I'm not going long options. I'm selling premium. So I am still net long, but I am expecting a short-term move down for me to get out of these short positions. And if I don't, great. I will make way more when the market goes up than if I pray that my short positions expire worthless, because that means I'm going to be printing money. The market's at all-time highs, okay? Just like here, when the markets were extreme, I was telling you guys that I'm entering long positions. I was shorting premium. I shorted some put spreads, and I shorted some naked puts on the SPY and in other stocks. And today I covered most of my short-term positions. I'm still holding one. So basically what I was buying on this flush, I'm selling it here. I sold almost all of it. So even if the market drops and I sell my remaining position around here, it's still a profit, okay? So it's going to be a profitable move up, and yet I am still net long, okay, that I was this entire bull market in the stocks that that you guys know. If you've been following, you know exactly what I'm long in, okay? So that's it. This is what I think. Which way? Temporarily down. We form some kind of higher low before going higher. And then maybe we resist a bit at the highs of 700. We drop again back here to 685 before going up again. This is what my base case is going forward. Okay, because I think this war, like I said yesterday, this war has jumped the shark. I think both parties won out. Okay, so before we go, I'd like to end with something here. Okay, I'd like to end with this here. A pet peeve of mine. It has nothing to do with them. Well, it has to do with the markets, but this stuff really, really bothers me. I hope you guys will indulge me for like a minute or two to get something off my chest. Okay, you see here, a couple of days ago, a trader placed a $950 million bet on oil prices falling hours ahead of the ceasefire. Okay, this is basically insider trading. Okay, I really, really hate it. As a trader, okay, we work hard. It's very, very tough to be a trader, to make money trading, okay? You have to do your analysis, you pull the trigger, you take a risk. It's very, very tough, especially since you don't know the future. So you're putting a lot on the line, you're risking a lot every day to make money for your family or for yourself, for your future, okay? And that's good. Okay, however, in comes this guy with an insider move, bets 950 million. I don't know how much he made, but he basically made it on insider information, okay? And you have like, what is it? You have like, then a headline comes out, this isn't bad enough. This pisses me off a lot because I hate guys making money insider trading. It's so massively corrupt, okay? And then you have this move on Zero Hedge where like Trump has promised to pardon his top administration officials. This move was probably done by an insider official, and here Trump is going to pardon him before he leaves office. Okay, this is massively corrupt. This bothers me to no end. Okay, I don't care if it was Trump. I mean, the Democrats do it too. We have the Nancy Pelosi thing that bothers me too. Okay, this is a pet peeve of mine that really, really bothers me, and I wish this gets like, to me, it's like these guys deserve the guillotine for doing that. Okay, it's just horrible. Okay, it's a slap in the face to my profession. And I just thought I'd mention it. Thank you for giving me the 2 seconds, but I had to get it off my chest somehow. Okay, so anyways, let's you know, it's good that we finished this market up at highs today, this week at highs. That ends April 10th. Let's hope it continues going forward. I suspect we go down before going up, and eventually this market, as we said in the beginning of January, I think this market finishes higher for 2026. All right, that's it, guys. Thank you.